rates, they all fell, from December to January. So whether we look at 5 year, 10 year, etc. So broadly, the rally was quite broad based. We think going forward, probably the 1 to 5 year rates should outperform the 10 year yield levels. What it really means for investors. So what we have tried to say throughout our presentation is that globally growth is quite stable. Your inflation is going back to the pre-pandemic run rate, but your event risk in terms of the tariff issues or trade wars have increased, which will keep central banks slightly cautious, and probably will may not lead to aggressive easing cycles unless and until growth impulses really go down meaningfully. For what India it means is that given that we are already expecting inflation close to 4.2%, we will need a meaningful downward surprise on growth to cut rates more than the current market expectations of 50 to 75 basis points. And given that we are expecting a shallow rate cut cycle, we believe that a moderate duration products, that basically means that products which invest up to 5 years weighted average duration in their portfolio, that provide the best risk reward in this scenario, shallow rate cut cycle. Uh, other couple of other factors which are also positive, I would say, for intermediate duration. One is that RBI has been quite proactive on liquidity, so they are likely to keep liquidity on the easier side. They are likely to keep overnight rates close to the policy rate, which are quite constructive for the shorter end. Secondly, one of the major concerns of the banking system that was that the LCR guidelines, which would have required them to keep, higher LCR assets or the HQLA assets compared to the fixed deposits, and that probably would have led to higher demand for government bonds as well, because they need to keep higher HQLA assets, but that would have also led to us, a larger issuance of CDs. So as the RBI governor said in the policy that they are likely to defer LCR guidelines from April 25 to at least March 26, that gives further leg to the moderate duration rally, as the pressure on CD issuance will also be lower.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.